You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 10th day of July, 2013. A quick look at the numbers. The Dow is up, or down, make that, 21 points. S&P down 2.5. Comp up 2.5. Gold up $8.50, and crude up $2 and a nickel. Those are the numbers, a little red, a little green on the screen. As you know, we've got the Fed notes release coming our way here shortly in the next hour, 2 hours. Fed Chairman Ben Bernanke, he's going to do the full dog and pony show today, not just the notes release, but he's going to have a little talk with us. Now, the last time he talked to us, it threw the world into a tizzy, and all the other littler feds had to come out after him and try to clean up the mess and try to calm everybody down, and they did a pretty good job of it. So what happens today? I don't know. Now, I mentioned it last night on the blog or on Facebook or somewhere that if we get above this weekly zone here at 47.48, our next weekly trading zone is way up there. And it would take a lot of fuel being thrown on the fire to propel us that far. But if we break out, you know, more than a couple points above this weekly trading zone at 47.48, and that's kind of what we're looking for. We're looking for that move up to that next zone, which is way the heck up there. So we'll talk about that a little more here in just a moment. Michael, are you there?
I am here.
He is here.
I am here.
I take it the video didn't come together?
The video is 37 minutes long, and it starts out without... The way that I had planned to do the video was to start out with a recap of the prior day. And today I started out with just trading. And I traded for about 20 minutes, so there's like 20 minutes of trading video, then about 2 minutes of recap video, and then I go back to trading for another 10 minutes. So I thought I would just not do the video today. Hopefully I'll get the video right tomorrow.
All right, guys, well, here's what we're going to do. I'm going to go ahead and turn the screens and the mic over to Michael so that he can go through the recap, and as soon as he's done, we'll come back, we'll go to our good word for the day, we'll take a look at a couple of charts, and then we'll head straight out to Vegas, talk to Mr. David Williams from PageTrader.com.
All right. So I will grab the charts now.
Yeah, if you're ready, go ahead and take
Got
them.
them. Got them.
All right.
They're coming over. Coming over. There we go. And
Okay, I can see your charts, and I'm on mute.
excellent. All right. Let's see, guys. This morning it was a difficult day trading. There was no follow-through, very limited follow-through, I'll say, on most of the markets up until 11:30 anyway, when we ended the morning session. You can see in here we started off, our first trade of the day was a soybean trade. We lost 8 ticks on that. Our second, well, not our second, our actually next to last trade actually was the Russell. We gained 6 ticks on the Russell trade. Crude oil was our last trade of the day. We took a couple of crude trades, 3 crude trades I think. We gained 19 ticks total on the crude, minus 2 ticks on gold, plus 3 ticks on copper. We ended the day, we got our 2 points, but I hadn't been keeping track of it, but I know we didn't get it until the very end of the live trading room this morning, so I put in 120 minutes and 7 trades. I had an 8th trade, I think was the copper trade that I took off at the very end. So we were at 2 points when the crude trade had finished up and got us at plus 19 on the crude. We had made our 2 points then. We're ending the day at 162.5 is what we ended the day with. So far in the month, we're at $1,705 per contract. Now, when I say $1,705 per contract, what that means is in all these markets that we trade one contract at a time. Every trade that we put on is one single contract. So when you look at these numbers, these monthly numbers, that's per contract. If you learn the trade setups and you're comfortable taking the trade setups and you're profitable in your sim and you switch to live and you're profitable in your live, you work your way up. If this were 2 contracts, it'd be 10,440. If it were 3 contracts, it'd be if it were 3 contracts, it'd be 16,000. What would it be? 16,200, 16,320. I think if I'm doing the math right. But you just multiply by the number of contracts. All right. Now, I always say in the live trading room that people should be doing better. Partners who have learned the setup and are doing the setup on their own should be doing better than I am. And I say that because I miss a lot of trades, and I know a lot of you guys are, and that's great. Some guys aren't, and that's we'll work on that. But I know a lot of you guys are, and that's great. And that's what I expect everybody to be at some point. All right. So far for the month of July, we're up $1,705 per contract. In the partners session, the partners pre-market session this morning, we ended with just plus 6 ticks on gold. Okay, plus 6 ticks on gold. And we took 2 crude trades, but we were break even. All right, that's where that went. Now, let's jump into the trades that we did take. I'm going to start right out with the soybeans. This is the soybean trade we've been waiting for all morning. It's happening right now. The long trade right here at 93.5. 93.5. There's not a lot of room for it to run right now, but we had been watching the soybeans and watching the soybeans. We took our first trade over here, all right, and we stopped out on that. And then we're waiting and waiting and watching and waiting and watching and waiting, and it never happened. And then the morning session ended. We had a big run-up. We needed to pull back, get some divergence. We got that. We needed the up close above the trend line. Now, here's our trend line. So here's the up close above the trend line. Okay, this is the soybean trade we were waiting for all morning, right there. I just showed you the loss that we took on the soybeans this morning. We went long on the close up above the trend line right there, and it stopped us out for minus 8 ticks. Okay. Let me jump over to gold. Gold was the next market that we traded. Oops, hang on. Hang on a second. Let me jump over here to gold like this. All right. On the gold, we traded some gold here in the partners session in the pre-market, and We made some money on gold in the pre-market, but that doesn't count toward here. All right, in here, our first trade on gold, we took a profit of 6 ticks right here. All right, we took a profit of 6 ticks. We missed the following trade right here. We missed anything that happened over here as well. I think this all happened really fast. We took a short trade over here. We stopped out. That put us at minus 2 ticks on gold, and that's where we ended the morning. All right. There were some more gold trades in here, some that we missed, some that won, some that lost. We missed them all. Okay, we missed them all. There was a nice short right here on gold. We missed that. There was a short back here that would have stopped out on gold. We missed that. There was a long trade right in here that we would have taken some profit on. We missed that. It was tough trading this morning. There was very little follow through. Okay, very little follow through. That was gold. Now the next one we'll show you is crude oil. Okay, on the crude, let's see. Let's go back here to the pre-market. Here you go, the partners session of the pre-market. Started right out here. There were a couple of nice trades that we missed right here. We got long on this one, took a break even. We missed this one. Then we got in this really choppy section right here. It was building a head and shoulders pattern. I had identified the head and shoulders pattern to the partners, and I had said, if we get down below this neckline, this blue line right here was the neckline. If we get down below the neckline, there's a lot of room down below. I believe 105.03 is what I was looking for. But it was really choppy on the way down, so we didn't have that many opportunities to trade, unfortunately. Okay. Then the crude inventories came out right here. You see the price jumped, and the price should actually, go up by the end of the day. We should see crude oils higher on the day. Now, after the crude inventories came out, there was a long trade in there that we missed. There were a couple other trades in here. Long trade in here. Now we didn't have any divergence anymore. Long trade right in here. That went nowhere. Some consolidation broke out of the box to the upside. There was a long trade in there. We took a little bit of profit on. A short trade here we took a little bit of profit on. And at the end of the morning session, we took 10 ticks profit on this one right here. All right. That was our crude trade for the day. There were some more during the break. There was a long trade right here and a long trade right in here during the break. Okay. That was crude this morning. Now, let's see. I've done crude, the Russell, gold, soybeans. Let me do the copper really quick. We took one trade on copper. This isn't the copper. We looked at the euro. One of the partners had asked to look at the euro, so I looked at the euro this morning. There were 2 opportunities on the euro right in here. We didn't take either one of those. And the copper. This is the short trade over here on copper. We did take this short trade right in here on the copper. All right, we had a down close here, came back up, tested the BBC, gave a down close, and we took a short trade right in there on the copper. Right now the copper's come back down, tested the BBC, and given an up close with a blue cycle, so there would be a long trade over here on the copper right now. That would have been from back there. All right. That was all the trading that we did this morning. Okay, we didn't do any more trading this morning. As we look at the ES, the problem that we had with the indexes this morning, I did do the Russell, didn't I? I think I did do the Russell. Here we go. On the Russell, we had a short trade right in here for a 6-tick gain. That was our single trade right there for a 6-tick gain on the Russell. Now the problem with the indexes this morning was the Russell was above the weekly trading zone while the ES was below it, or one was inside it while the other one was just outside it all morning. So the indexes were all messed up this morning. Okay, we didn't trade the indexes at all until the very end when we took that one Russell trade. Gold just a second ago had a short trade that worked out a little bit, and it's setting up another one right now. Right there, you need a down close below that trend line. Let me just jump around here and see. On the ES, there was really nothing to do here on the ES. It was really tough trading. Dwayne took one trade right in here this morning. He shorted right here at 44.75, and it took about an hour for him to take profit down here, 2 points profit down here. But I'll let him get into that with you. Okay. And let's see. That's it, guys. That is a wrap. If you've not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you get 5 business days in our live trading room. 5 luxurious business days in our live trading room. You will be sent an email when you sign up for the free trial. You'll be sent an email that tells you how to download the charting platform, how to download the indicators, how to install the indicators, how to install the layout, and all that stuff. When you get to the part about the layout, send me an email and ask for my current layout, and I will send you my current layout so your charts will look exactly like mine do today. Okay? You have to make sure you download the indicators first, though. Okay? You got to make sure that you've downloaded all the indicators from the indicator store. All right. That, I think, is where we're going to wrap up the recap. If you are on the free trial, you should have gotten something in your inbox yesterday telling you what it takes to become a partner. Okay? If you're on the free trial, you should have gotten something in your inbox telling you what it takes to become a partner. If you are in here and you've taken the free trial in the past and you want to become a partner, send me a quick email at support@cfrn.net and I will get back to you. I will let you know right away what it takes to become a partner. Partners, there's a partners meeting tomorrow night. All right, tomorrow night, 9 p.m. That's still on. Also, all the partners, the early start tomorrow is not going to happen on Thursdays. We're not going to be able to do that. Okay? All right, guys, that's it. We're going to wrap it up, and we'll catch you tomorrow morning. All right. That is it, Dwayne. That is it, Dwayne. And you know what? I just did all that, and I didn't even have the recording on. That's okay. I'm going to do it again in the morning. No, I'm not. What am I talking about? Maybe I will. Anyway. Dwayne. Hello. All right. Okay, well, let's just go over some trades then while we wait for Dwayne to come back. Right in here. This is what we're looking at, right? This is the trend line, but you didn't need the trend line because you had blue on the cycle with the bullish divergence and a test to the BBC. You didn't need the trend line. Okay. I don't know.
You waiting on me?
I am, buddy.
I didn't know.
I was waiting on you. You didn't know.
I
said, Dwayne. Dwayne.
Could you hear me in the background?
I could not hear you in the background.
Oh, okay, good. At least my mute button works.
Yeah.
That's
It
always good to know.
shuts off the volume, too.
So, did you have a nice recap?
Yeah, we did a nice recap. We did a good recap. Covered everything. Of course, I didn't record it, but you know what? I am going to do a recap again anyway.
You didn't? How come you didn't record it? You forgot?
Yes. I apparently forgot to press record on the recording button.
Oh, you know what? I just recorded it.
Oh, you did? Huh.
So I don't, I mean, when I upload it, it'll be, I'm a few days behind in uploading to, let me just grab these charts for a minute. Let me show you. Let me show you a thing or two about a thing or two.
Show me a thing or two about this thing.
If you hustle over to our Facebook page, which I would be amiss to not put the link in for everybody right now. Let me do that while I'm thinking about it.
Hey,
guys, you need to go
me.
like us over there on the Facebook. I'm sorry?
I said, hey, look, that's me and the kids. That way.
Oh, it is. Hey, Mike. Okay, so there's that. All right, guys, coming at you. Send to all. Now, skedaddle on over there. Like that page. We hardly have any likes at all. I feel they're getting a complex. We only have 808 likes. Come on. Seriously?
You can do better than that.
You can do better than that. All right. What I wanted to show you is not that. I want to show you this. CFRN E-Mini Daily Radio Show. I don't think I've missed a day here recently getting these uploaded, except I'm just a few days in, I'm a few days behind in getting them uploaded, but I've been recording them. And so when you go out to the Facebook page, guys, you can go to this little guy right here, and you just click it, and boom, it plays.
Boom.
Boom.
So, Dwayne, let me just ask you a question.
Boom.
If someone were to go out there and be a friend of ours on the Facebook page,
Mm-hmm.
would they be able to trigger like the tweets that you give? Would they be sent some sort of a notice that, you know, something had happened on the Facebook page? You would post something?
I don't know, quite honestly.
I think so.
Do you, when I post something, do you get notified?
I
an email?
think something goes in my email. But I know, you know, my wife, when people post on Facebook pages that she's a friend on, she always gets these notifications on her
Okay,
on her iPhone.
but does she get an email notice every time they post, or if somebody posts to something that she has made a comment on?
I think it's every time they post.
Hmm.
Because she's always commenting about things my mother
Okay, is there
posts.
anybody in the audience who's a friend on Facebook with us? Do any of you get emails? Anybody get an email because when I put it here on Facebook, it goes out and automatically tweets it for me. And then I copy it over to Stock Twits and Seeking Alpha. Some of those videos, though, I thought they played right. Yeah, see how this one's playing?
Right inside.
Okay, I
the
loaded
Facebook
this.
page.
Yeah, it plays inside of the thing. So you don't even leave your... Can you hear that?
I can't. No.
Oh, that's right. This is a really good one here, guys. This video, it got music and everything. New to CFRN, this video is a great place to get started. Learn who we are, what we do, and how we do it. Right there. If you go out and Google Learn to Trade E-mini Futures, it pops right up to the top. But you can go to our Facebook page. So anyway, I digress. What were we talking about?
I was curious if you could set the thing so that
I
you
don't
would be
know.
notified. I know you can because my wife does it. If you have
Okay.
Facebook on your iPhone or your smartphone,
Yeah.
you know, you can get. That's one way to get notified on your smartphone as soon as something new comes along on the Facebook page. And
Well, then people should do that.
they should. They should.
Guys,
They
what
just
he said.
come out, be friends, and do all that. Maybe you should tweet that to the thousands of followers that you have in Twitter, so they will come over.
Dude, I got a few. Hey, and speaking of Twitter, last night, guys, we had a tweet. Consider being short below 1642. Look what happened right here. This thing dipped down to 41 1/4. Okay. Now, what does that mean? Well, here's what it means. It means if you are trading the tweets just based upon a break of the number, then you got stopped out on this trade. That's what that means. We've talked about this. You got to go one or two ways. You either trade the break, okay? Now, an interesting way of doing this last night would have been, as price came down and touched 42, look what it did. It bounced off of 42, went back, hit the zone, came back down to 42. It just spiked it, then turned around, ran back up to the zone again. So it's almost like I got this upside down or backwards, but here on this 42, now this happened on July 10th at 0100 hours. So let's go to July 10th at 0100 hours. That didn't work. Okay. So price is coming down, coming down, coming down. Here's 16. I better get a line. 1642. Okay, now remember the line in the sand is 16. The tweet says consider being short below 1642. So if you trade it just on the break of 42, then you're triggered in here you get a 3-tick joyride, and then the party's over. Okay, and then we bounce and bounce and bounce and head back up to the zone. If you're waiting for the 4-tick range to give you the setup, okay, you never got triggered in on this trade. And we've talked about this quite a bit the last few days. By doing it this way, by using the bigger picture time frame and the tweet to get ready, like on this last one here, we measured this out yesterday. Even though the tweet was way down at 33, you didn't get triggered in until, as I recall, it was 36.75. Let's go back. I think I've still got that here on the chart. Let's see. Yep, right there. Let me shrink it up a little bit. Pull this down. There we go. Okay, so this is an example, guys, of price came back, tested the tweet area, 33, but now you're going to wait as it starts to move north for the slingshot to give you an actual setup. Okay, it didn't happen down here at 33, a long setup. It was way up here at 30 on the up close at 36.75. That's where you got triggered in. Your drawdown was 36. So you had a 3-tick drawdown, and then it unfolded all of this nice upside action. So that's an example of using bigger picture, layering that on, and then layering the smaller time frame on top of that to get your entry. If you were using that method last night, you never got triggered in. If you were using just 42, like sell 42 on a stop, you got triggered in for 3 ticks, and then you got stopped out. Okay, so you need to, now remember, the Twitter timeline, it's a public timeline, so you can go back and look at every tweet for the last couple of years. In fact, I have the ability to download a data file, so if you don't want to have to like dig through all that stuff, if you would like a data file that you can maybe put into an Excel spreadsheet and you could totally stratify it for the benefit of the entire community, I'd be happy to give you the data file because it's public anyway. It's just that I'm the only one who can download it, but I would send it to you. And I'd love to know, what kind of results there are. I just haven't bothered to journal them and track them all the way through the way Michael has done with the spreadsheet in the live trading room. Michael has suggested that I at least go back 60, 90 days to just give it like a thumbnail, or what do they call that, a sketch, a thumb sketch? No, that's not right. You know what I'm talking about. Anyway, I may do that as time permits. You guys know I got a lot of time on my hands. Mike Reed is in the house. I can stay until 1 at the latest. I hope my headset works. If not, I'll try again tomorrow, Friday. All right. I hope your headset works too. Let me do this. Let me get through. I don't want to say get through. Let me do the good word for the day. Then I'll bring Mike on, and then I know you need to run. I just been seeing how long I can keep you here, make you squirm. You all right?
Yeah, I'm still here. I'm still here.
All right. Later.
All right, buddy. We'll see you later.
Oh, that eight years of broadcasting that got put up. Is that how? Check it out.
Broadcasting. Yeah, that's what I want to say.
Broadcasting.
Yeah.
I'm not that crazy about it, but it'll be all right. All right. Later.
All right.
Okay, guys. Let's go to our good word for the day. Today's good word for the day comes from Mark 4:10. It talks about the Bible. Do you consider the Bible to be literal truth, or is it all just a fairy tale? Now, if you're a believer, you've thought about it. If you're not a believer, you've thought about it. Let's think about it together. What does Mark 4:10 say? When he was alone, the 12 and the others around him asked him about the parables. He told them, the secret of the kingdom of God has been given to you, but to those on the outside, everything is said in parables, so that they may be ever seeing, but never perceiving. and ever hearing but never understanding. Otherwise, they might turn and be forgiven. Well, now that's crystal clear, right? All right, let's go on. Have you ever heard anyone say, I believe everything in the Bible, literally? Well, if you have, and I'm going to topple some sacred cows right here. I can hear them falling already. Well, if you have, that person is probably misguided. I better say that again. Have you ever heard someone say, I believe everything in the Bible literally? If you have, that person is probably misguided. Why is that? Why do I say that? Well, there's a big difference in saying that the Bible is the inerrant Word of God and saying that every word should be taken literally. Okay? Huge difference. Take a look at the teachings of Jesus in the Sermon on the Mount. This is one example. Jesus said, okay, this would be in red in your King James Version, if your right eye makes you stumble, tear it out. Throw it from you. For it's better for you to lose one of the parts of your body than for your whole body to be thrown into hell. Now, Jesus was not actually urging us to pluck our eyes out. He was talking about the seriousness of sin and how we must repent of sin lest we wind up in hell. But if every word Jesus uttered is taken literally, then every one of us must immediately gouge out both eyes. I'm glad it's not literal, right? Now remember that Jesus taught in parables, metaphors, and allegories. Remember, we're not saying this is not the inerrant Word of God. No, that's just two different trains of thought. He used these devices, the parables, the metaphors, and the allegories, to make a broader spiritual point. Does that water down the Scripture? Absolutely not. Jesus was simply using memorable illustrations to communicate perfect truth. And that's where the guidance of the Holy Spirit comes into play, to help us to distinguish between literal truth and a parable, thereby allowing us to understand the rich truths of our faith. And that's our good word for the day. All right, back to the chart. S&P 500 E-mini futures. This is an hourly chart. What are these dotted lines I have up here? Those are called our weekly trading zones, WTZ. We publish these every week for the CFRN partners. We send them out in an email before the market opens on Monday. Once the market opens, the zones are published. They don't change. They're constant for the entire week, carved in stone, so to speak. Now look what happened. We had a tweet Sunday night to consider being long above 33. What did price do? It ran into the zone. Now a zone is an area or a spot in the market where we believe price will pause, consolidate, coil, make up its mind what it's going to do next. And once price hits a zone, there's only a couple things it can do. Move up to the next zone, drop to the prior zone, or get hung up at some important area in between. And in this case, that important area would be the tweet at 1633. Okay? So price runs up to the zone, comes back to 33, up to the zone, back to 33, up to the zone, back to 33. Now what's the distance from 33 to 36? So it's 3 points. 3, 6, 9, 12, 15, 18. 18 points were made available in this 3-point range. Up and down and up and down and up and down and up. And now here, 1, 2, 3, 4 hours, we consolidate right at the zone. And then we launch and off we go. Make a nice little move up. We get a swing high. of 1645, a little pullback, and then another run, and there we go. We come within one tick of the zone. Another pullback. Look at this pullback on the pullback. We come all the way back to 38 and a quarter. The zone's at 37. And then we run, and this time we hit the zone. And this is where we spent most of the radio show yesterday. 1, 2, 3 hours just back and forth with this zone. Okay? Price has yet to close above it. We hit the zone yesterday morning. Okay? At 9 a.m. Pacific. That would be 12 Eastern. And then look what happened. 1, 2, 3 hours, 4, 5, 6, 7, 8, 9. And last night we made that little dip. Got down to our important number at 42, bounced back to the zone, back to 42, back to the zone, back to 42. And now look, we're trying to make that bounce back up to the zone again. All right? And that's our whole week. Today's Wednesday. This was the Sunday night Globex Open over here. The 8th. No, let's see. The 7th. The 7th was the Globex Open. Okay. Here's Monday. It's Tuesday. Here we are, Wednesday. Now, this Fed meeting today, I think, is a bit important. We're going to go to Mike Reed here in just a second and get his thoughts on it. Fed Reserve Chairman Ben Bernanke will speak to the markets today. The last time he spoke after the FOMC meeting, the financial markets freaked out, according to Dave Wessel, economics editor of the Wall Street Journal. That's obvious, apparently an official term, freaked out. Ben Bernanke's remarks at the time sent a shockwave through the markets when he suggested the Fed's stimulus could end. Wessel tells Morning Edition host Renee Montaigne that Bernanke tried to explain that if and only if the economy kept improving, then the Fed would begin later this year to reduce the amount of money it's pumping into the economy. The market interpreted Bernanke's comments to mean interest rates would increase, which prompted a sell-off in bonds and stocks. The Fed is buying $85 billion in bonds a month to keep borrowing costs low. That economic move has encouraged borrowing and spending. Now the markets, well, Dennis Lockhart, president of the Federal Reserve Bank of Atlanta, told an audience in Marietta, Georgia last month that what the Fed was trying to do for the economy was similar to how a smoker who wants to quit begins using a nicotine patch. The markets, however, took it to mean the Fed was going to quit cold turkey. It took speeches by half a dozen other Fed officials and about a dozen other metaphors to clarify Bernanke's clarification. Stocks have largely recovered since Bernanke made his stimulus comments, but there has been a surge in long-term interest rates. The benchmark 10-year Treasury rate has gone from below 1.7% at the beginning of May to nearly 2.7% this week. That's a 1% change. And in the latest Freddie Mac survey, the mortgage rates have gone from about 3.4% to 4.3%. We talked about this on the radio show yesterday. The market is pushing up interest rates because the incoming news on the U.S. economy has been encouraging, and in part because markets are anticipating the day when the Federal Reserve won't be trying so hard to keep rates down. There could be further clarification of the plan today at 2 p.m. with the release of the meetings from the June meeting, and then there's always a chance the markets could get agitated again when Bernanke speaks 2 hours after the announcement at a conference in Cambridge. He is expected to talk about the central bank's track record throughout its 100-year history. So that's the news. That's what we need to be on the lookout for. Now, based upon what Bernanke has to say and how the markets react, I've already said that our next weekly trading zone, it's way up there, man. Let me just say it's more than 25 points away from where we are now on the upside. If we get above 1650, the market is sending me a signal that it wants to try and go to that number. Am I going to trade the speech? No way. Not going to do it. I'm going to sit it out. I'm going to climb up in the bleachers, watch the action. And let me show you one last thing real quick, and then we'll go to Mike. This morning in the live trading room, we had a short trade right here on the S&P. Okay. Now, here's what I want to point out. We know that the average swing, the S&P 500, is 3 to 5 points. Why is that important? Well, I'll show you. Right here, price is at 16.4. We're just going to round these numbers. 16.42. Price makes an advance up to 16.47. Okay, 42 to 47. How many points is that? 5. Okay. Now price pulls back to the BBC. Now look here. We've got the bullish cross. We got price pulling away. We got price pulling back. Look down here. What do we got? Bullish divergence. Is every piece of the puzzle in place for a slingshot trade? The answer is yes. Bullish cross, price pulled away, price pulled back. Cycle didn't change. We don't even need a trend line. All we need is the up close, which we get. Okay? But there is a problem inherent with this trade on the long side. And what is that? Well, and because we don't have time to play the guessing game, which I would like to, I would, I'm just going to tell you. Price already went from 42 to 47. That's 5 points. What did I say the average swing is? It's 3 to 5 points. So look what happened. Price tried, buyers tried to keep it going, but the market had already established an obstacle right here. Okay? If you take this trade, you've got to know there's 2 obstacles in your path. Number 1, actually 3. Number 1, you got to get above the CFMA1, the backbone of our indicator set, because that's going to act as resistance until you close above it. Second, you got to take out this swing high. Third, you got to understand that price already moved the entire average swing. Now, that's an average swing. Do we have bigger swings? Yes. Do we have smaller swings? Yes. That's why it's called an average. From 62 to 67, 5 points. It rolls over, comes back down, gives us a bearish cross. The bears have the ball. They're trying to take it down the field. Okay, where do they go? They go from 47 back down to 42. How far is that? 5 points. They actually get it a little further down. They almost get it 6 points this time. Now, I took in the live trading room, I took this trade here. Okay, the other guys in the live trading room didn't take it only because there was some confliction between the Russell being in a zone and the S&P not. And I don't want to cloud the issue, okay? But then when we got down here, things were setting up, but we'd already gone the distance. And I told everyone in the live trading room, I said, be careful about going short here. Even though we have a zone right down below us that's calling, we've already moved the average swing, so the chances are the market will want to go for a deeper pullback or a deeper retracement. Look what happened. Turned right around and went from 42 up to 48, 6 points. Now, what did I originally say? The average swing, 3 to 5 points. So it was proved here and here and here and here. This is just another day in the market. Okay. Here we go from 48 back down to 42. There it is again. Now what's it trying to do? Same thing. Will it eventually break out? Will it eventually do something different? Absolutely. Okay? But this is just something you want to be thinking about. Hey, Mike, are you still there? Mike? I think I might have lost Mike. Let me send him a text message. I think he's got a headset issue again. No, that's a different Mike. I'm talking about Mike Reed. He goes, he's at the beach, man. No, we got two Mikes. I'm waiting on Mike Reed to come in, Trade Stalker. We got 15 minutes for you, buddy. I hope you can get your headset to work. All right, while we're waiting on him to sort out his headset, if you have any questions, type them in. All right, I just sent him a text message to encourage him to get that headset issue figured out. All right, any questions on this, guys? Over here, again. Now, in the mornings, when Michael is showing you the trade setup, the slingshot over and over, market after market, in the live trading room, is he factoring this in? Okay, no. And here's why. Because this is subjective, okay? What we want to teach you in the live trading room every day is we want to teach you the setup that has no ambiguity. The basic criteria for the setup, the bullish or bearish cross, the pull away, the pull back, and then the up close or the up close above the trend line, depending upon the color of the cycle. That's all you need to know for that trade setup. But trading is about more than just applying some indicators to a chart. Okay? If it were that simple, everybody would do it. And we would have nobody, the world would be a much different place. Okay? Here's the deal. It's not that simple. But you have to master that portion of it. Okay? You've got to master that portion so that you can then factor in other things like highs of the day, double tops, where are obstacles to the trade, all of that stuff. Yesterday, for those of you that hung around for the after show, we went into some great detail on the Australian dollar, the 6A. We talked about where a potential trade where a person might find a trade. We drew these reverse fibs, okay, from this swing high down to this swing low, which put these little colored lines on our chart, and we said this is a 62% retracement. This is a daily chart. And what we, after all of our, are you there?
Yeah. Hey.
Mike, all right. Hey, you made it. How are you, man?
I'm good. Sorry, I didn't.
Awesome.
I guess my headset's working. I didn't know it was.
It's working, yeah.
I had
You
to make
sound
it
good.
run. Okay.
You
All
sound
right.
good.
So
What's been going on in the life of Mike Reed?
oh, same old, Dwayne. Except we do have a birthday tomorrow for the oldest son at home. So
How old is he going to be?
he's going to turn 17 tomorrow. I can't believe it.
Wow.
Goes fast. Yeah.
Is he driving
Yeah.
yet?
He's ready to. He has to get some more, a couple more hours in driving yet before he can take his test officially. So.
What's the official driving age there?
16. See, if you take driver's education, it's 16.
Okay.
And if you don't, then I think it's 16 and 6 months. But they have to have a number of hours driving with the parent logged, I guess, before they can go take their test, driver's test. So,
And that's something I assume that's done on the quote-unquote honor system?
yeah.
Okay, I
Yeah.
got you. Because when I grew up, and this is a long time ago, we were barely out of the horse and buggies, but at 15 you got your learner's permit, and you kept that for an entire year. And all that what that did is it allowed you to drive a motor vehicle as long as there was another licensed driver in the vehicle with you. And then at 16, you just went down and showed your birth, actually you turned in your learner's permit because they verified your birth date when you got the learner's permit. You just go down on your 16th birthday and they give you the license and you're good to go. I think in some states they've raised the driving age to 17, and I think some states maybe even 18. So.
Yeah, I think they have. That's what it was when I was growing up too. My dad taught me on a 3 on the tree, I guess they called it. But did that until I had the learner's permit, if I remember right. And then when I was 16 years and 6 months, I went right down and took my exam, and drove since. But yeah, I don't. It's changed. I know it's changed in some states that it's gone up to 17. It's probably not a bad idea, but
no, it probably isn't. I remember that was really a huge day, a real rite of passage, especially in the times we grew up in. Because we grew up in a small town, there's no public transportation. If you didn't have a car, you didn't go anywhere, or you had to depend on your parents to take you, and that was sketchy at best. So when the day I turned 16, I had a car. I bought and paid for it with my own money because I started working 40 hours a week when I was 14. Plus I went to school, but I was working, saved up my money, bought a car, paid cash, I had my insurance, had a tank full of gas. That morning I think I woke my mom up at like 7 a.m. Get up, Mom. You got to take me down to get my driver's license.
yeah.
It doesn't open until 8. Okay, well, we want to be at the head of the line, and so, yeah. And that was the beginning of all kinds of stuff. When a young boy suddenly has his freedom, he's mobile, got a couple dollars in his pocket, it's a whole different world. So, my son, when I think about him, he's 11. In 5 years, I don't know what the law is here in Phoenix, but I'm thinking it's still 16. In 5 years, he could get behind the wheel of a vehicle, and that scares me a little bit. For a number of different reasons, on a couple of different levels. Just because he's a little scatterbrained, but I think that's normal at that age as you're about to become a teenager. So I'm sure he's going to be. I'm sure he's going to be just fine, and I'm going to make sure that I'm not going to give him a brand new car. That wasn't done for me. I told him I'll help him. I want him to get a job just as I got a job, and I said, you save money, and I'll meet you halfway. Whatever you're able to save up, and whatever your half is, I'll match that, and then we'll go find your car when the time comes. So he's excited, and he's already saving. So
well, that's good.
Yeah. So how about trading, man? We've had such great volatility. Have you been enjoying it? Have you been taking good advantage of it?
Yeah, we had, well, until this week, unless this is the ranges have gotten a little smaller, daily range, but there's still volatility intraday, and the numbers have been pretty good. Let's see, the top 48 area was resistance coming into the week. Let's see, 48, and then on the downside, we had just a little bit lower than today's low for the for pullback support, down around 39 to 38.5 area. But they didn't get there this morning. It's just been very slow, and it seems like there's a good underlying bid on pullbacks, a deeper pullback.
Right.
They get met with buying.
Well, here's a daily chart, and on this daily chart, I've got the ATR going, the average true range. Now, we got up a couple days ago. We peaked at an ATR of 27, it looks like. 27.5, 27.7. That's the highest I remember the ATR ever being. It's drawn down now to, looks like 20. And I think that's average. I think 20 an average true range. Now this is on the Globex session, but one of our someone in the audience yesterday, I think Susan, she pulled up the ATR of just the day session over the last 14 days, which is the standard look back period, and I think she said it was 18 or 19 just on the day session. So
Yeah.
that's pretty good volatility. I mean, that's very tradable, I think.
I've always kept the 10 and the 20 on that. It's been quite a bit higher in the past. More so at lows, near lows, when you get big volatility. But yeah, I could do a run back, I guess, and look at a spreadsheet.
Now, okay, when I say ATR, I'm talking about the difference between the high and the
The
low.
high and the low, right.
Yeah, so
The range for the day.
you've seen a higher ATR than 27?
Yeah, sure. I have. Well, in the last?
Well,
last how
okay, if I scroll back to January, I see 22.
I'm talking years ago.
Oh, years
Remember
ago. Okay.
Yeah.
Oh, yeah. You know what? Especially when after the meltdown started, after the housing bubble
Yeah.
burst.
Mm-hmm.
Oh, I bet the ATR was enormous. I didn't even track it back then.
Yeah.
What was it like then? Was it 30, 40?
What date do you want to go to? Go to.
I can't go back that far on mine. Mine will only take me back to September of 2011.
I have a spreadsheet. I've been putting these in by hand since 94 on this spreadsheet, I think. Well, I can't find the exact date. I can see that the 10-day. I'm in 04. Which date do you want me to look for? Doing 08?
No, I was just curious. When you say it's been substantially higher, I'd forgot about that crazy volatility we saw for a while with the housing prices. I mean, we would see 20-point swings in a couple minutes there for a period of time.
Yeah, I see. Well, right now in August of 07, I see 39 or 32.
Wow.
I'm sorry, 33, 34.
The
next day, 30. Yeah. So, and then I suppose we get into 08. I have to go down there, but it jumps up there again. But yeah, there was one in the 40s. So, as on a 10-day range, 10-day average. This is the day session also.
Now, if I do a little fib retracement here, Mike, from this swing high to this swing low that's showing on my daily chart, we just took out the 62% retracement on this pullback.
Yeah.
And then if I come in here and just draw a horizontal line right across these tops, this is a pretty important area. We've taken out the 62, and if we can take out this level of resistance, then that opens the door for us to go back and challenge this high up at 1685.75. There's a couple of obstacles along the way. There's this one here and this one here. But that's it. Those are the only two obstacles I see in the way.
Yeah.
How about you? You looking for higher prices from here? Or are you looking
I got
for
this.
more?
I'm looking at that same zone.
Okay.
For something to happen, and they tagged that twice this week so far. So yeah, watching on the top. Well, see today, I think we'll probably get a reaction to the Fed minutes, and I believe
that comes out is that at 2 o'clock that the notes come out?
Yeah, 2 o'clock.
And then what time is he supposed to speak?
I think he begins at 4:10 p.m. Eastern time, just after.
Ooh, that's after the market closes.
Right.
Now, see that right there.
That's what I saw on
concerning.
That's what I saw on the economic calendar I look at.
The fact that he's waiting for the markets to close before he speaks. Well, the last time he spoke, he threw us into a tailspin, and I was just reading the article from the Wall Street Journal that it took 6 other littler feds coming out saying, okay, here's what he really meant, to kind of calm everybody down.
Yeah.
And so, I don't know, guys. To me, it's ominous that it feels ominous that he's going to wait for the markets to close to speak, but it could just be good common sense. He doesn't want to spook people the way he did last time. So, I don't know. Hey, let me grab David real quick and bring him in because I know he wants to say hi to you, okay?
Okay, sure.
All right, just hang tight.
I just have
Be
a
right
few
here.
minutes.
Guys, don't touch your radio dial. We're coming right back.
Beat of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310. And we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
We don't need you now, on your way. I thank the Lord for love like ours that grows ever stronger. I always will be true. I know you feel that same way too.
Good morning, Dwayne.
David, good morning. Welcome to the show.
Thank you very much. And good morning, Mike Reed.
Good morning, David Williams. How are you?
I'm doing good, Mike, and how are you doing?
I'm doing fine also, thank you.
Well, wonderful. I'm delighted to have you on and to chat about markets a little bit. I'd like to tell the audience a couple things about you that they may not know. One is which, that you've been around markets longer than any of us.
That's a true story.
I started in 1990. I started actively trading in 1990, so I've been doing this for 23 plus years. I don't know where Dwayne falls in that, but I know it's shorter than that. But where are you, Mike Reed, in all of that?
I began with the markets in 1982.
Well, then that just sort of cleans the clock for all of us, doesn't it?
At the start of a big bull market, actually.
Well, that's an awful lot of experience. I mean, if you go back to 1982,
Just
there
means
were
I'm
still,
older than you guys.
I know, there were still some people who felt that disco was a happening thing, just to let you know. It still hadn't quite gone away yet.
Yeah.
Oh, that reminds me, my white suit's still at the cleaners.
Yeah, you might want to pick that up, Dwayne. Just
Yeah.
Hey, guys, I'd like to get both of your takes on this. We're ushering in a new era here, and some would say this is not good for Ma and Pa Kettle.
Yeah.
The SEC has lifted the ban on hedge fund ads. Hedge funds, small startups, and other firms that seek private investments will be allowed to advertise publicly for the first time in decades under a rule adopted today by the Securities and Exchange Commission. Adopted by a 4-to-1 vote, the rule eliminates an 80-year regime of advertising restrictions intended to safeguard small investors from taking on potentially dangerous risk. The rule covers the way issuers raise funds through private offerings, a process that is exempt from requirements to report public financial statements. Now, I want to get you guys' take on this, but you guys, you're about to see stuff you've never seen before, because this is an 80-year ban that's being lifted. It's going to get crazy out there. Go ahead.
wow, yeah, that's impressive.
Yeah, I can't stay much longer. I just think it's, well, I think they're going to have a requirement of a net worth requirement, X house, X your house, or an income where you have to have shown that you made over 200,000 or plus for 2 straight years or something to that effect, which used to be, the old rule for I think it was for getting money as a CTA when I had a Series 3 license back in the old days. Bert would know. That might have been a requirement in the past for CTA money, but Is there? As in, like, yeah, it's going to be. Could be a bubble there too, turn to a bubble, but we'll see what these ads are like. That'll be interesting. But I don't know. I personally don't like it. There's enough ways for people to lose their money then.
I mean, you don't even have to really trade in the markets to just have money wasted frivolously. You can just pay your taxes, and they'll run $4 million seminars teaching people to dance. So I mean, that's perfectly good way to do it as well. Just a little humor there.
I'm sorry. Do you have something against dancing?
No, actually, that's very funny. No, I don't have anything against dancing. I was just commenting, making a small political comment. It's not even a political comment. It's just ridiculous is what it is. But we can go into that. But no, I don't have much comment on this. It's an expansion of the ability for these companies to sell their product to people and to get people interested in investing. People have to be very clear-headed and understand what they're getting involved in, because investing does involve, in many cases, risk that you're not even aware you're taking on. You know, especially for people who are new or don't know what's happening. Go ahead.
It's been people spend more time on their grocery list when they go to the grocery store. What's in it and all that kind of help. They'll do more research on what they're buying rather than how much time they put into their investment. Yeah, I think that is. I would not be surprised that's the case in a lot of cases.
No, Bert just sent me a text message that says it's called a QEP, Qualified Eligible Participant, $2 million in stocks and $200,000 in income. To me, Bert, that sounds like the old what did they call them? Sophisticated investor.
Yeah, something like that.
If I'm not, Bert, are you there? Are you there, Bert? Can you weigh in? How does this new thing today, this 80-year ban that they've lifted? I mean, that's commercials that can be shown to the general public.
Yeah, but like I think Mike pointed out, they're going to have some probably strict rules where you have to be maybe a QEP where you have to qualify. So I think it might be more of an advertising piece, but at the same time, the houses and the FCMs will have to do their due diligence and have to know their customer rule. Will have to really have to play a part there. But yeah, that's a thing in the CTA world. There is a level of sophistication where if you have a lot of money and you qualify, you don't have to disclose returns and that kind of thing. So that's been around for a while.
Would they take somebody who drives a Chevy Spark EV? Would that be enough to clear those hurdles? Something like that? No.
I think so, because that's a sophisticated person, right?
Well, I think that's what I'm saying. I think I'm making that very point. Thank you.
Yeah.
Thank you for making that.
Yeah, I know. I knew when to come in.
You do. You are my Ed McMahon to my Johnny Carson. I'll tell you.
That's right.
Yeah. And I need to step out, guys. So.
Okay.
Great to talk with you, Michael.
Bert, good to hear from you. Dave,
yeah, you too, Mike.
Nice to talk to you.
All right.
Dwayne, thanks for having me on.
Hey, Mike, thanks so much for coming on, buddy. Everything went good with the trading camp, I take it?
Went great, yeah, very good.
Okay, good. All right, well, listen, if you have an opportunity, today's only Wednesday, pop back in tomorrow, Friday, if you can.
Hey, my headset works, so.
Yeah, no, you sound
good.
great.
That's a plus.
Yeah. All right,
Okay.
man.
All right,
See you,
take
Mike.
care, guys. Take care. Bye.
Yeah, I just those trading camps. I just don't like sleeping outside in a tent. This is me. But for others, that may be good. But singing trading songs around the fire, after all that. All right, I'm silly today. I think you can see that. I think the public has seen the silly side of me, and it's not good. Anyway, I don't know if there's any enticing or interesting news today. We do have, was it today or is it Friday that we have the minutes or some kind of report coming out? I don't keep up on that.
That's today.
That is today.
And Right, that's going to come at 2. But the interesting part is that they're going to give us the notes release at 2, but Bernanke is not going to make his speech until 10 minutes after the market closes.
Well, and they do this. This is a very common thing we're seeing over and over again. There is a reason for it, but I don't know what it is. Maybe, I mean, if it's an innocent thing, maybe they don't want to have the volatility. They want people to be able to think for a little while before they take action in the market. And maybe that tells us something. There's a tell in all that, that he may have something that could affect markets big in what he's going to say, and he wants to not say it during the market.
To my knowledge,
yeah.
We talked on the show a while back about Bernanke making a speech when the markets were closed, but that turned out to be nothing but some university's commencement announcement he was doing.
Sure.
I don't know of him in the capacity as the Federal Reserve head Fed. I don't know of an instance where he has made an announcement when the markets were closed. I think today is a unique event.
Well, and that's an interesting observation. This may be something that they feel would affect the market. Certainly the market's big enough for them to take in consideration, obviously. I do remember, and I think they do too, when, in fact, one of my largest trades ever came during Greenspun, whatever his last name was, Greenstein. What was the, Alan Greenspan?
Yeah, Alan Greenspan, right. Yeah, you're right.
When he suddenly decided unexpectedly to change the interest rate. And this now has to be more than 8 years ago, because I was at our older office, which is relatively close to where we are now, but I distinctly remember the market going up $75, full S&P dollars, in 4 minutes. And I actually was in that trade and could not believe the response of the market. So that's an example of throwing some news out there. Hey everybody, we've just lowered the interest rate, or or raised it, whatever they did on that day. But it had a hey everybody kind of a introduction to it, and the market. Some of the listeners may recall, if they were trading that long ago, that the market moved up $75 S&P in 4 minutes. The fastest move I've ever seen in the markets was an advance, not a decline. So, and I'm not talking about a gap opening. I'm talking about a traded move. They traded them up. So it was an amazing day. And so because of that effect that you can have on the markets while they're trading, I wouldn't predict that he's going to say something super important, but they certainly are going to consider that if they had something really important, they might not want to do it during the market hours. It gives people some time. Not everybody trades on Globex and so on, and it gives the market, the public, some time to absorb information and not, So I don't know what he's going to say today, but it'll be interesting.
Well, according to the article that I shared from the Wall Street Journal, the last time he spoke, which was a month ago when they actually had the Fed announcement, the markets freaked out, and it took, it took speeches by half a dozen other Fed officials and about a dozen other metaphors to clarify Bernanke's clarification.
Right.
The stocks have largely recovered since Bernanke made his stimulus comments, but there has also been a surge in long-term interest rates, something we were talking about just yesterday. And it may be that he's not going to say anything bad, but it may be that they learned a lesson from this last time, and they just don't want to create a scenario where the markets, have to go through these wild gyrations. I mean, for majority of people, the majority of people don't have direct access platforms. They're becoming more common today. But most people are invested through like an Ameritrade or a Schwab.
Oh, no doubt.
And they can buy stocks and that type of thing. But as far as being able to trade and trade heavy on Globex, again, that is coming into play now more and more. But by and large, I don't think most people would even know how to go on and put on a trade at 5 o'clock in the afternoon when the markets are closed.
Yeah, well, we'll see. A little bit later today, we'll get a chance to take a look at what he is saying and what the markets feel about it, their response to it. In the meantime, we certainly are seeing some of the slower movement that is typical of the S&P in the summertime and in some other markets as well. This is very quiet behavior. You might have to get used to this for a little while, because this is the kind of behavior that is consistent with summertime seasonality in the S&P and the stock market. Hopefully we won't see this every single day, this slow, but it does mean that if you're new to trading, it's easier to learn because you can get your feet wet in the real market, trading real contracts, taking on the real risk of trading and the emotions that follow that, and working all through that, riding the bike. And you can read about the bike, you can simulate the bike, but this is the real bike. And the more you can do the real bike, the better off you'll be, because there are some lessons that you can't learn on the simulator. There are some lessons that you can't learn in any other way except being actually in the market. Good friend of mine, some of you might be ping pong players out there. Remember the game ping pong? You don't hear much about ping pong anymore. Even the name sounds silly saying it. But ping pong is a very fast-moving, as you know, can be very fast-moving game, and it requires really great skill to play it well. It's really a remarkably skill necessary game. And they have devices that are, they call certain players machine-trained. And that's because they have machines now, and they've had them for many years. I used to own one that can shoot. You fill it up with a bunch of ping pong balls, and it'll sit there and shoot balls at you, and it can put spin on the ball this way, that way, top spin, reverse spin, side spin. It can do anything you want, and you can have it hit in exactly the same spot over and over again to get your move down. And it's an amazing way to really learn how to do a specific thing in ping pong. And you can do it with your backhand, you can do it with your forehand, you can have the ball hit and always land in the same spot so that you can really work that. So that's, in a sense, a kind of form of simulator, except, it's not, it is a real ball and it is a real paddle, so you're learning, you're machine trained. But then you have to take all those machine moves, and now you have to play a real opponent who has his own machine moves or his own moves that you're going to have to deal with. And they won't look exactly like the machine. They'll have their nuance, their touch, their spin, and whatever. And that is kind of like a good analogy between the simulation and the actual trading. But you can learn a lot from simulated trading. You just can't learn all of the really important things, which in a quiet market you will have an opportunity to get your feet wet if you're new. And that's why I do encourage people to trade during quiet markets if they're new, so they get an idea of what it's like to be in and what it's like to hold on to a position, what it's like to see a target almost get reached and then pulled back and then later reached, and all the stuff that you have to live through. It's kind of like a micro scale version. And trading is a lot of fun. It's not supposed to be the kind of fun that some people talk about when they say gambling. Gambling is fun. Trading should be, if I may say so, fun because it's an opportunity to skillfully extract money from wise decision-making based on probabilities. That's why it's fun. Gambling is when you knowingly take a risk when you know the odds are against you. That's a gamble. That's my definition of gambling. You go in and you take a risk when you know that the odds are against you. We and you and the listeners really only want to trade, and we're working towards improving all the time the act of trading when we know, and I have to put quotes around know, but with a high degree of probability, know that the probabilities are in fact in our favor. And all you need is the probabilities in your favor to get some good trades on. And I think more skilled traders need to go back to that. More advanced traders need to remember that after you've been down in this, you can get, literally, it's like being in a house of mirrors after a while. You can go down so many paths, so many things, so many techniques, so many this, so many that. All we really want to do and all we need to do is find the probabilities in our favor in a particular setup to make money from it. It's not, all the things, the revenge trading and the, I could name off a whole list of things that people talk about. We get all tied up in those, or traders can. But the discipline, and there is a discipline, there's not if, the discipline is to keep your eye on the ball and realize that all you're simply looking for is a high probability or a higher than normal probability that an event is going to happen. If you have that and you have the ability to trade, you can have a lot of fun putting trades together and making money. It can be done. Don't quit your day job. I don't care what anybody tells you. You will know on your own in the end that you can do this, and no one else can tell you. No one else should induce you. No one else should cajole you, if that's the right word. Nobody should be working that side of your life. You will at some point say to yourself, hey, I actually can do this. I see this. I get this. And some of you may be in a position where for whatever reason you've saved money, you don't really need to work, and my suggestion has always been start with a small account. Do not put $100,000 in an account to trade with. Don't do that. Start with a small amount, $5,000, $10,000, whatever whatever reasonable amount of money. But think if your son came to you and said, Dad, I want to trade. Well, how much would you give him? That's how much you should start with, something in that neighborhood.
You only need enough money in your account to trade one contract. You should stay in the simulator until you're consistently profitable. This is what we teach. Once you're reasonably satisfied that you've achieved profitability, consistent profitability, we teach our students to go live with one contract and only one until they earn $1,000 in the market. Now, the intraday margin to trade one S&P 500 contract or the Dow or the Russell or the NASDAQ is $500. So once you make double that, $1,000, okay, then you add a second contract, okay, make another $1,000, add a third contract. Following that method, you never have to put a large sum of money in your brokerage account. You can leave it in some interest-bearing account somewhere. Not that you can earn a lot of interest these days in those types of accounts, but it's safe. It's not there for you to get upset and wig out and start revenge trading with. It's just a smart business move. And over time, as you build up the size of that account, instead of, see, this is what traders always do. They're always moving money into their account. If you'll build it the way we teach you, then you actually move money out of your account. That's a beautiful thing.
Well, there you are. So anyway, so keep that in mind. Start small. Let your success determine your growth. That's a really good way to think about it. Let your success determine your growth. Anybody who has money, it's easy to say, well, I'll just move more money in and trade more contracts. But I would suggest that you let your success determine your growth, and as you continue to grow, you will also continue to have that your own feeling about whether or not you want to stop your other source of income and so on, and really focus on this full time. But that's a very personalized decision, and it has to be based on your real knowledge and understanding that you really have something. If somebody said to me, listen, you can't do anything else for income and you have to trade, for me, I still would want to go to an office. That happens to be one of my things. I don't like to be in my house all day. I want to get out of my house. And I learned that about myself many years ago. So that's just me, though. There's plenty of successful people that can trade from their homes. They're very comfortable doing it. For whatever reason, that's not me. So if I had to just say, look, all I'm going to do is now trade, I've learned over the years that for me, over-focusing, coming in with the idea that I have to do something for me every single day. I know there are systems and methods out there that look to make a certain number of dollars per day and so on. But in my particular thing, I'm really simply looking for good, high-probability opportunities that I can see without straining. It's not like I have to squint my eyes, internally, so to speak, to catch the good move. I want it to be obvious and easy and come right out and wow, look at that. Let's start something here. That's the kind of setup that I really prefer. And with that, I would focus my time and I would start with a reasonable sized account. I've been around the block a few times in trading, so I can put a little more money in there. But the idea is that if somebody said to me, listen, all you can do now is just sit and trade all day long, my reaction to that would be, great, get me an office, and great, let's put in a certain amount of money in an account so that I have enough to trade in enough contracts to make this work. And that's the path I'd go down. But each person has to realize for themselves, and it really is a realization. You suddenly say, hey, I really have something. I can do this. I can put this together. And that doesn't mean that every trade is successful, but one of the things that you know is not just that you can make money, it's that you can protect the money that you have made. See, that's one of the big things that makes a difference between a trader and kind of a gambler, is a guy that has made money thinks maybe he's a trader, but if he can't protect the money he's already made, then he's gambling. What you do with the money you've already made in that trading account, if you're just going to let the market run against you and take it all back, well, now you're not really trading. You're not really investing. You're just gambling. And so what you do with the money you've already made, it's one thing to make it, and it's a second thing to hold on to it. And of course, when you take a trade, you have to risk some of the money you've made. That's absolute. There's no question. You have to risk some of the money you've made. That's why you have to use stops. That's why you have to wait for the good opportunities. They will come, especially if you're looking at a number of different markets. We all know this. By looking at a number of different markets, you're not going to have to get into a position where you have to squint to see the trade, so to speak, because you've got plenty of markets you're looking at, and you're saying, hey, this looks iffy. I'm going to leave that alone, but over here, I've really got something in gold or the bonds or whatever. So these are some basics, but it took me a long time to learn the basics. I'll tell you that. It took me a long time to learn the basics of trading and the basics of doing things right, because I knew I was right already. I already had it. I already had great confidence in what I was doing, and I thought I could do this. But the markets are not the same as running a dental office or running a machine shop or doing business, and even though you may have had success in those other areas, the markets are a completely different beast. They're not going to pay attention to what you say and what you want. You have to learn to understand them intimately in order for you to follow and be able to trade and allow them to pay you, so to speak. It's not the same as running a business. Many people who are successful turn around and they've had the golden touch in other areas, and then they turn around to the markets and find, like I did, that this is not the same thing. This is not even the same kind of life that I was living before. This is a very, very different thing to do. And you will find over time that you have swings where you're in love with the markets, where you can't stand them, where you're ambivalent about them. You go back and forth. I can tell you, when you get more mature, if that's a good word, you will still be interested in the markets, but you're not dreaming so much later about what it's going to do for you. You're really more interested in finding good setups and working them through to whatever their conclusions are. You're kind of gotten away from the dream life of saving the world with your trading and so on, and you've now achieved a place of what you could call sort of a balanced outlook. You know the markets are there. You know they have sometimes tremendous opportunities, sometimes reasonable opportunities, and you're interested and you have a good outlook towards wanting to take advantage of some of those opportunities. You may not get the whole move. In most cases you won't, but the part that you do get, you're very appreciative of what skill set you had to have to develop to get to that point. You're not poisoning your own lake. You're not beating yourself up always about what you didn't get, and so on. Remember, these are traits that just about everybody that gets in the market exhibits, and one of them is you had a successful trade, but you turned it into a negative, and you carry that negative with you, of course. You don't carry the positives very well, but we do carry the negatives with us. And by turning it into a negative, by saying, I got out, I made, whatever the number is, I made $800 on this trade, and it went and ran to $2,000. And I should have stayed, but all I got was $800. And then they ran all the way up to $2,000. And before you know it, you've turned a winning trade into a losing trade in terms of the weight that you're carrying around. And by doing that, that's what I call poisoning the lake. You can't poison the lake you're living in. That water has to be clean. And if you're going to turn even good things into a negative, then you're poisoning the lake, and you're going to find that it's very uncomfortable to live there, and it's very difficult to have greater success when the water is dirty. So be very careful what you do emotionally with the results of your trading. A better way of saying it is watch what you do with the emotions that come through you with trading, whether win or loss. What I try to do with everything is I try to find how I can let that thing uplift me. Like imagine a man in a hole. He's found himself, he was in the desert somewhere, and he fell down a hole somehow. And he is down there, and it's very wet down there, and he realizes that there's underground stream or something that's down there. He's 18 feet down, so he has no chance of climbing his way up. That's a negative situation, right? Things don't look so good, so rosy. But he realizes that if he digs a little hole in the wall there, the water starts to come in. There's some water, there's a nearby aquifer, he can feel the mud there, and the water starts to come in, and it's going out the other side. There's a hole there and it's going out. So the water is passing through down there. He's sort of in a little bit of a stream down there, and he doesn't know what to do. What he can do, though, he turns that negative into positive. He packs some mud up on the exiting water, and now the water can't exit, and he floats right up to the top, 18 feet higher. The water keeps coming in, and it just carries him right up. That's a good example, I think, of a person turning what looks like a negative into a positive, as in terms of what you carry with you emotionally. So if I have a bad day, so to speak, in the markets, then what I try to do with it is remember what happened and realize that it's one trade in 1,000 trades that I'm going to be having, and not turn it into a negative. It's just one of the things that happens to traders. You don't even have to manipulate and massage it. Just let it go. Just realize that it's just what it is. It doesn't have to be turned into something negative. And then on the other side, one of the things I've noticed is that when you have winning trades, you're not turning those into the big party that you used to either. So you're not swinging from the extreme on the low side or even swinging to the extreme on the high side. You're kind of like, okay, great, fantastic. You close the trade out and you go on to the next trade. You wouldn't know that by the way we all talk about our trades on the radio here, but in actuality, emotionally, you're not getting so high off of your wins, and you're not getting so low off of your losses. And after a while, you're pretty clear-headed, and you can do this. You can do this better clear-headed than you can not clear-headed. So I hope those are useful little pointers. Those are things for me personally. Everyone will have their own add or takeaway from that. And so with that, Dwayne, would you like to head over to the markets?
In keeping with that line of thought for just a second, I do want to say that I know that sometimes for partners when they come into their first workshop, or even when they hear me talking in the live trading room in the mornings, they think I'm a bit of like a negative Nelly or something, because I get calls, I get phone calls from someone who's new. They've just started their training, and well, bless God, they're doing really well, okay, and they're excited. And I don't want to rain on anybody's parade, but I also want them to be grounded in reality. And so it's a fine line I walk when I try to say, okay, now that's great. I'm so happy for you. You've been paying attention. You did the right things, and awesome. But calm down. I want to bring them back to that baseline kind of that you're talking about. And because at this point, they haven't experienced the other side of the coin yet. The gut-wrenching, agony of being stopped out a couple times in a row when you just did your very best work. It's just, okay, I'm new to this. I started learning. I listened. I paid attention. I did everything I was supposed to do, and boom, boom, boom. I had 5 trades in a row that went my way and were profitable. I truly have found the pot of gold at the end of the rainbow. And then here I come, the Grinch, going, well, no, okay, there's more to the story. Well, what do you mean? And so, because I'm trying to mentally prepare them for when the pendulum swings the other way, because the pendulum is going to swing the other way. and I want, but there's really no no matter how many times you say it, it falls to a little bit, to a small degree, it falls on deaf ears until they actually experience it. And then they call you up, and they're as filled with as emotion as they were on the good day, but now it's not such a good day. And it's, I don't understand. And it's like, okay, this is the thing I was talking about, okay? And that is the place where the rubber meets the road, and that is the place where a person either becomes a trader or they don't. Anybody can be excited and be happy about getting your points and having a profitable day. It's how you're able to handle the days or the trades when things don't go the way you planned. That right there is where we thin the herd. And boy, is that a herd thinner. I'm telling you. Some people, unable to distance themselves from their emotions, are never able to make that cut. And so I speak to everybody in the audience, you know, whether you're David's client or if you're with us or, you know, wherever you're getting your training, or maybe you're training yourself, maybe you're learning. If you can get beyond that thing I'm talking about right there, then you have a shot at becoming a trader. We've said this before on the radio show so many times that, you know, simply having money in an account somewhere does not make you a trader. David said, the first time I heard that, it was David saying it, and I've since said it a lot of times because it is so true. Okay? You got to go through some bad times, some down days, some drawdowns, some pain. How you react and respond to that defines who you are, or will ultimately define who you become as a trader.
Well said.
And okay, well then I'll just leave it at that.
Well, there you are. Yeah, absolutely.
I won't mess it up. I'll just leave it at that.
Yeah, no, it just takes time. That's all. It just takes time and experience, and you'll pick it up. But I think if people think, and then we'll get to the markets, if you think to anything that you've gotten really good at, you'll find that you've kind of, all the extremes have kind of been brushed away, and you're kind of just able to do the thing now. It's neither real high or neither real low, but you're able to do it real well. That's kind of the place you want to get to with trading. When I see people super excited, this is similar along those same lines, about having a win or several wins or something, I know that ultimately is going to have to calm down some in order for them to balance, because the swing that way is going to most likely be equal or worse. If the swing the other way could be even worse. I actually knew somebody who, as maybe people know this, and I want to be very sensitive to this, there are some people who are bipolar, which can mean that their mood swings are very extreme. And I knew somebody that was a trader that had bipolar disorder, and I don't know what a person like that, exactly what the medication is or how they manage it, but it can be managed with medication. But I remember telling him that because he went, you know, we all have our swings, but he was going so far with his swings that in a way, I don't think he could have been successful at anything he was doing, let alone trading, because if he was in a bad mood, it would amplify every little thing. He was interpreting everything in its worst possible light. So as an example, the trade is already in his favor, and when it would go a tick or two down, even though it's still above perhaps his entry point, those 2 ticks, you would have sworn that he was being stabbed in the back by, you know, an unknown assailant, because the market needed to just go the way he needed it. Otherwise, it was just going to be all hell in a handbasket. And that is not going to work, and that's an extreme example, and it's unfortunate he has to deal with that, but he does deal with it in his own way. And you know, publicly, I'm going to say this: if you have those kinds of disorders, a very common thing is people just tend to learn to live with them. But I also know somebody who did get medicated for that particular disorder, and they are tremendously changed people because of it. People don't want to get medicated. They don't want to feel like there's a thing controlling their brain. Well, I got news for you. There is something controlling your brain now, okay? And that is that you don't have enough of a certain kind of chemical or whatever it is. And you should not be afraid to let somebody that knows what they're doing with that give you a chance at not having to live that kind of life, because these people often learn to deal with their own swings, but to be around them is just incredibly transparent. How sensitized they become to the slightest little input that comes along their way. Same thing on the upside. You know, they make a few dollars, and before you know it, their head looks like it's about to explode. And I've seen it all. So you just that's an extreme example. In the end, you get really good at stuff. You calm down on both ends, and you're able to do it really well, very consistently. That excitement that feels so good, that's a distraction. That depression that feels so good, that's a distraction. You end up living somewhere in the middle, and you're able to demonstrate and do your trading over and over again much more consistently. So keep that in mind. The extremes do not help the consistency of your ability to do anything. You're much better off being somewhere in the middle. And with that, we will go on to the markets and talk about the markets, which happen to be very slow and quiet today. So let's do that. Dwayne, want to start with the S&P here? Okay, I'll take that as a yes.
No.
Okay.
Yeah, no, I do. I do want to. I just hit mute for a minute because
no, that's okay. It happens.
Typing.
Happens to me all the time. Okay, let's one more time. We'll review where we are. We're coming off of a weekly reflected wave bottom. We normally expect a multi-week advance in a setup like this. Can you shut that door? And we've had the multi-week advance. In our particular methodology, where we're looking for and often trading a larger time frame than intraday, we were forecasting that the bottom at 1553 or whatever it was down there that we put in. Oh, excuse me, I'm sorry. On the weekly chart, the bottom was a little lower than that. Excuse me, it's 1555. That we would advance ultimately to the 1650 to 51 level. And we got very close to that this week. We made a high of 49. My feeling is, based upon a lot of experience in doing this, that under normal conditions, we would normally have no trouble completing that 1650 upside target. It's nearly 100 points from the bottom and shows the value of having these longer time frames. Not that you necessarily are going to be in the whole trade, but that you have a direction to trade. You know, if you want to put direction into your trading, sometimes you know, tracking the larger can set you up for the direction very well. Anyway, having said that, we've come up there. We've come very close to that target, and what we're going to do is we'd like to see the market actually complete 1650. We may not get it. We've gotten to 49, but under normal conditions, I think that they would test or spike that level, given all the other facts about the market here. They have not been able to, and it just so happens that there is a swing high previously on June 18th and June 19th at 1649. So that's all they've been able to do to get to that level. So we'll see. We're kind of at a critical juncture on the upside. Time-wise, we're starting to run out of some time on the upside, but that would only mean that there could be possibly a multi-day reaction on the downside, but possibly a continuation of this move. I don't want to consider the move over in its entirety yet, but I am a little bit, the week isn't over yet, we're Wednesday, but I am a little bit concerned or anxious maybe to see them do the normal thing and complete those levels. If they do, that will help us set our next trade in motion. As it stands right now, the completion of 49 and 50 and so on really is, for us, the culmination of a trade. There's no really new thing here, although on our shorter-term charts, we are long this morning, even though it's extremely quiet. We are long from a couple of 30-minute periods ago when the market was bottoming here, and we're holding our aggressive position now for the possibility of somewhat higher prices. But I think there are some sequoia trees that are actually going to have some new growth coming out of them prior to those higher prices coming here in the market. That's a joke, because sequoia trees are very big and old, and they would take a long time to grow those branches. Go ahead, Dwayne.
We get it. We get it. Mm-hmm. Right here, guys, is that area David's talking about on the daily chart. We can see that when price broke out above and we put in the historic all-time high in the S&P 500 futures, 1685.75, we pulled back into this little shaded area, and it was support for a nice bounce. And then we spent 3 days or 2 days struggling with it. And then once we broke through it on the pullback, it was resistance, another pullback, resistance, another pullback, resistance. And now we made a nice move down. And look at this. Here we sit right inside of this little area, this little decisive area. Now this should help you. And let me even open it up just a little bit. This should help you kind of hone in on the importance of this area where this little candle, this little daily candle sits today. Remember, resistance, resistance, resistance. That was after it was support, resistance, resistance, and now we've got the Fed coming out to speak. Well, let's see. Here in 15 minutes, we're going to get the notes release. That's step one. But then step two will come today, 10 minutes after the market closes, when Bernanke will. I don't know if it's just a prepared speech or if it's a Q&A session. If someone knows, could you type it into the chat box? Either way, I think we're going to get some kind of decisive move out of this. Now, we have one more weekly zone overhead, but it's way the heck up there, okay? More than 25 points away to our final upside zone. If there's going to be a move there, then whatever the Fed says today could provide that fuel, because it'll take some fuel to move the market that great of a distance, and that will entail putting in a new all-time historic high. So we'll see what happens. It should be interesting. Let me just say this. I will not be trading in front of it. In fact, last month when the Fed announcement was made, one of our partners who was in the partners meeting where we specifically discussed, do not trade the Fed announcement that's coming up, okay? It's just not worth it. Go sit in the bleachers, watch the action. I feel so sorry for him. My heart was just broken. He blew up his entire account. Everything he had worked for and built up, gone in the twinkling of an eye. And what made it so, you know, sometimes in life things happen that you have no control over. He intentionally stepped in front of that oncoming object. And so I just encourage all of you today, don't do it. You know, if you'll just resist the urge, and I understand the urge because I used to have the urge too. When I thought a big move was coming because of a Fed announcement or something else, man, I wanted to be in that thing. Work on your self-discipline by just resisting that urge today. Don't even allow it to come out and play. Don't even humor it by just trading one contract. Just see if you can just exercise some self-discipline and say, no, I'm going to wait, see what happens. I'll be back tomorrow with plenty of dry powder. Try that. Okay, David, back to you.
Okay, let's see. So I don't have much to add other than we've, just for the S&P short-term intraday, that we felt that the low we had in our support and resistance panel, 42 today, they've tested 42. They actually went below it earlier. And they've tested 42, so we bought at that level, and we're going to let them just, you know, this is how it goes on quiet days. They're starting to firm a little bit here, but we'd like to see, you know, maybe them get up to 47 or something. We're going to try to book something. In a day like today, a whole extra point, hey, it's pretty impressive, you know, because the market is so quiet. So we'll keep an eye on that, and we'll get back to it after we make our round of some of these markets. There are some interesting things happening today. In the gold market, as I mentioned yesterday, we have a daily top that's due today. For those of you who like turning points and so on, this is a reflected wave daily top, July 10th, and the market has tested some important levels and is starting to trade consistently with what a top would look like on a day that they're putting a top in. But we have that information in advance with reflected wave, so we may be utilizing that information to do something with gold. That's something that we've talked about. Let's move past that over to the U.S. Treasury bond market. A couple days ago, in our professional trading group, we had a forecast on July 8th, early in the session, that the bond market would advance and touch, and I mentioned it on the program as well, that it would touch 133.25 on July 10th. So this was back on July 8th. So we had 2 days. Today's high was 133.26. Today's July 10th. And the market reversed off that level and is attempting lower prices right now. So it's quiet, but it is still what it is. It's a nice little trade up. The bond market really is in a decline. And so you sometimes can put together a pretty effective trade, sometimes not so effective, but you can often, and it's sometimes we do it. We take the attempt that after a big decline, we're looking for the market to suddenly and magically just firm up on some really clear and easy number. Most people emotionally are not ready to buy because the market was down sharp, and yet the market has already shown that it's sitting on a very easily, very nicely sitting on a number. But people discount that because of the emotions they have from having seen the big down day. Now this is a little bit more advanced because it requires, it is almost a psychological trade setup as opposed to a technical trade setup. It's maybe a hybrid because you know that most people do not want to buy, and yet the market is actually showing you that it's firmed up very nicely. But what we do in our mind is because we saw something bad, we're looking through those glasses, and even though it is firming up on a number very nicely, we don't believe it. We just don't straight up believe what our eyes see. That's because we're filtering it through the idea that, no, this thing's really in a wipeout move and so on. But I can't tell you, and I think many people who are listening know, that quite often the market will reverse right off of a level like that and have a very good multi-day zip up that's very tradable, and then they resume, perhaps, or maybe not, but maybe they resume the big downtrend. But that's the kind of trade that we've done. We've done a couple of those in gold recently for decent-sized moves up before the decline continued. We're at a juncture right now where the gold is already advanced. We didn't do anything with that advance, and we have that top we talked about. But anyway, with regard to the markets in general, watch for that and see that even though your technical system may be saying, hey, this is a buy right here, at least for a short-term move, you really discount it heavily, not because of technicals. The technicals are actually saying good things. You're discounting it because of emotionals. There's technicals and there's emotionals. And your emotionals are pushing you from taking it, and it is a little bit more of an advanced trade in the sense that it's a hybrid play on psychology and on the technical side of the market. The market is giving you a clear technical signal to go long, but your psychology is pushing you away from it. You flip that around and say, hey, you know what, I'm going to buy this because it is, even though I don't feel that good about it, it actually is showing me everything I need to see in the technical sense. So keep that in mind. That's a very powerful way. Sometimes you can get very major reversals off of something like that. So we'll watch this. The bond market is below some important levels today. A daily close in the bonds today below that 133.25 level. The forecast target is, of course, the weaker position, and I do expect that, and that normally would indicate lower prices. But we do have a setup in motion. I won't go into the details on pricing and so on, but we do have a setup in motion just in case the market wants to be tricky and move higher. Then we have a stop, a buy stop in place, and so on for higher prices to come into, if the market does flip around here, into July 11th. So this should be interesting, I think, for bonds, for the September U.S. 30-year Treasury bond market. Between today and tomorrow should be interesting, and I know we have some talk coming out today, Bernanke and so on. So it's going to be an interesting day or so here.
In keeping with the whole bond interest rate scenario, one of the listeners just sent me an article, front page today, from the Wall Street Journal. Las Vegas, in a city dotted with tens of thousands of vacant houses, Jericho Warren figured it would be easy to buy his first home. But nearly a year after beginning a search late last summer, he has come up dry. It's been a nightmare, says the 37-year-old U.S. Air Force officer. There are plenty of empty houses. They're just not for sale. Indeed, it is a lopsided equation. The number of available homes has plunged here after a sweeping state law subjected lenders to stiff new foreclosure rules and penalties. With banks exercising caution, many homeowners, including those seriously delinquent on their loans, have been allowed to remain in place. As a result, there's little on the market at a time when first-time buyers and real estate speculators are anxious to tap both cheap prices and low-interest mortgages. Many real estate agents, home builders, and consumer advocates argue that the law intended to remedy foreclosure processing abuses has backfired. Some owners who are behind on payments aren't maintaining their homes as banks refrain from eviction proceedings. The perverse outcome, inventory shortages have spurred new developments despite a glut of properties stuck in foreclosure limbo. People most hurt by this law are the middle class, according to Steve Hawks, an agent in Henderson. He refers to this phenomena wrought by the foreclosure measure, Assembly Bill 284, as the AB 284 bubble. You should ask your friend,
I know
about
it. He knows. We talk about it all the time.
About this particular term.
This particular, yep.
Oh, okay. Until last decade's housing boom, prices didn't rise much here, making it possible for casino dealers or cocktail waitresses to buy the American dream. Now a tight market is pushing up values and making it harder for buyers to find homes to purchase. Anyway, I thought you'd find that interesting.
No, I do find that interesting, and it is true. And in Las Vegas, even though we have nearly 600,000 people right in Las Vegas, Clark County, and so on, there's really only 3,500 houses for sale, something like that. Maybe a few more. That's it. Now that's ordinary used homes, so to speak. I don't know what to call them, but our older homes and new construction. So builders have had a double boom through this. The builders had the boom of the fact is that the market was bottoming and the market has come up, but they had a double boom that the law that he just talked about has blocked the ability for banks, or not even blocked them, but it's in the bank's interest to let these houses out much slower to the inventory that they have, to let it out slower to complete foreclosures and so on. And so while all that has been going on, people like this fellow have turned to new home construction. And that has really made the new home construction go through the roof because they got a double boom out of it. The bottoming was already in the market, plus the market the used homes really couldn't be bought up by people. You have to stand in a line 10 deep on these homes. You can't even, right now, and I'll get back to the markets in just a moment, but I just want to say, if you want to go buy a home, the realtors out here won't even drive you to the home to see it. You have to make an offer on it right away.
Interesting.
You can't even go to see the home. You have to make an offer on it. And the reason why is that it makes no sense. If you go and see it and like it, 2 other offers are already ahead of you now. You might as well fill out your offer now and then go make 3 or 4 offers, then go out and see the homes. And then you can always back out of your offer. But there's no point in going out because in that period of time there's more offers being made, and most of the people who've made offers are not going to end up with that home. So it literally is 10, 20, 30, 40, 50 deep on those homes. So that's what helped the new home construction out here. And with interest rates going up now, and if this law gets fixed, then we'll see the market stabilize a little bit more and it won't be so active. January of 2012, I came on the radio and said the housing market bottom I felt was in. It was done in 2011, and that people should go out and buy homes. Those who followed that advice back then in Las Vegas are up by $40,000 to $50,000 on their home equity right now, each and every one, because that's what has happened to the homes out here. The homes that the pricing where they were at January 2012, February, March 2012, April 2012, all those houses are up by $50,000. And the squeeze, the turnaround, the jump came through part of this, what Dwayne just read, the law that basically was prohibiting people from having access to homes that were in foreclosure so they could buy them. The foreclosures took too long and so on. So it's a very interesting dynamic out here. One last thing I'll say. The hotels are the slave runners, and the slaves are the people that work at the hotels. Let's just lay that out sort of, I hate to characterize people that way, but let's just think of it that way for a moment, as ugly as it sounds. And the slaves have to have somewhere to live. So the market has to have prices that are reasonable, because the hotels are not going to pay you enough to buy houses that are super, super high in price. The whole system is like an ecosystem where, and if you're going to work for the hotel and want to buy a home, you have to have a wage good enough to buy that home, but if the homes are too high in price, you can't do that. And so the whole system kind of self-regulates itself ultimately, so that people that work at hotels get reasonable wages, and those reasonable wages can buy a reasonably priced house, and so on. We're not in that state right now. We're not in that position right now, but that's normally how it gets to out here in Las Vegas. It's a small town. So the hotels are the dominating forces. Whatever prices they're willing to pay for their help, those prices ultimately have to be good enough to get houses. And it hasn't been that way for quite some time, and many people maybe have to rent and so on. But that's the way it works in the small town out here. There, we just had our nice pop-up. Let me just, there it is finally. Give me just a moment here. And that right there in the S&P, that some news just came out that something just happened.
Fed minutes, Bernanke, let's see, participants discussed how to communicate decisions on asset purchases. Here, let's see what this says.
The clear signal might be when unemployment reaches 7% is when they might terminate it and they consider raising rates. We've really got no further guidance here, just the idea that things should be moving in that direction, that they should provide more clarity. I'd like a little more information than that, frankly. Here we did get into positive territory, but most of the rest of the market isn't moving. Bank stocks, for example, you put up the BKX, had very little reaction overall. And I think what you're going to see here, there's your bank stock. That's a very, very small blip here. Dollar, put up the dollar for a second to see what's going on. But I think the bottom line here is there's the dollar weakening. Most of the traders down here would like a little more information that provide more clarity soon.
Okay, so now we wait for the other shoe to drop, and that will be when Bernanke comes on 10 minutes after the market closes. Now, guys, I said if we got above 1650, I have to start looking at the possibility that the market is actually going to try to run up to that weekly trading zone that's way overhead. Again, from where we were at earlier, I said over 25 points, and that we would need tremendous fuel to fuel such a move. And so we've gotten a move now all the way up to 53. This type of announcement, typically we would get a decent pullback. You get the knee-jerk reaction, you get the retracement, and then Mike Reed's philosophy, I learned this from him, and I believe in giving credit where credit's due. His philosophy is that the initial reaction is the ultimate direction the market is going to go in. So we've seen the initial move up. Now we're seeing the retracement, because this is an hourly candle. If we were looking at, let's go look at a smaller time frame real quick, so we can see really what that retracement is looking like. Okay, here it is. In fact, let's go from, let's just look at this leg right here. What did we get? We got almost a 38% retracement. We pulled right back to the BBC. And now let's see if we can challenge that high. We've got to take out that's an obstacle to the trade now, 1653. We did close back above the CFMA1, the backbone of our indicator set, but we've got a little obstacle right there. And then we've got this one here. So we'll see what happens. Again, this isn't over yet, okay? This is just part one. I don't recommend you, oh yeah, well Dwayne said, no. What Dwayne said is that he recommends you be flat ahead of this, what just happened, and flat ahead of Bernanke. Okay, now because you're a futures trader and you do have direct access to the markets through Daniels Trading or whoever your brokerage firm is, you could be in there as Bernanke speaks, putting on and taking off trades, except for that 15-minute window from 4:15 to 4:30 Eastern. no trades then, but at 4:30 trading resumes, and I'm sure he'll still be speaking. And it was just typed in by someone in the chat box that he will not just be delivering a prepared speech, he will be fielding questions from the audience. So that's my take on this, David. What's your take? Anything?
Well, just honestly, I don't have much to add to on the news side. When we came on the radio, we said we'd normally expect that 51 level to be reached and tested and so on. So we now have done that. And that is a very satisfying thing to complete this portion of the leg up that we originally were talking about. Additionally, as a day trade, I don't know. We don't trade in front of reports and news. We purposely will step aside if there's a big report like the main one, which is the employment report. But in this particular case, I was very happy and very comfortable to buy as we did earlier. And we had a nice 5-point trade out of this because they did pop them up good. They did complete the 51. And now I want to give a couple numbers on the upside as well that we think are important that are nearby. That these are more nearby numbers. They've completed 51. For us, the next important level on the upside will be 58 to 60. So we haven't gotten to those levels. We've gotten to 53. But this 53 is really just a spike of the 51. So it's interesting. Let's cover some of the other markets that we are going over real quick. But there it is. And then when Bernanke comes out and talks, and he doesn't always take questions, and that's interesting. So I'd love to just out of curiosity to hear how he handles, questions from the audience. Now, directly, people saying whatever.
For those of you that are new to all of this, by chance, the Fed. Having conversations with people and asking questions, that is new, okay?
Yeah, that's not normal.
That, in the days of Greenspan, and what was the man's name before him? Volcker?
Volcker, yeah. They're gods. Volcker. They come out, they decree things, and then they go back behind a curtain somewhere.
Yep, exactly. This is a whole new way of doing business. So.
Yeah. They go back to birthing South Pacific Islands or something. I don't know what they do with their other time, but they're doing something. Anyway, okay, the euro, this is, of course, opposite to the dollar. We're watching and continuing to watch the euro. I mentioned the other day that we want to see the euro stay above 127.45. They have, and that's going to set long positions into motion for us. There's something, pretty important here going on with the euro. With regard to their overall positioning, and where, for those of you who have reflected wave, you know what we're referring to, but I'm going to save the euro for a little later this week in terms of what what you might want to do, take an indication off it, and so on. At this point, we're very close to taking some action on it. Now, going over to crude oil, we all use crude oil. We all need to know what happens with this market, or if we don't need to know, we're going to find out, because things like gasoline and other things are going to change in price. Crude oil has continued its advance here today, and this is all part of the original forecast back in April, where the market was unable to go down to important levels, and back in April we forecast that the market would go to 103 and then to 106. And you've heard me mention that on the radio several times, and today the market has completed the 106 level. So this has been a really big trade for some of our traders. These are longer-term trades, not overnight, or excuse me, not intraday, but over. It's more than overnight. I mean, these have been multi-week kinds of setups. But this move from swing low up to swing high is like an $18,000 per contract swing. That's huge. That's a monumental swing in crude oil. And in spite of the fact that the 106 has been completed, there's one other target on the upside. This happens to be something that's for subscribers, but in the end, the main trade, the main thing that was being looked for has been completed now. And what they do from here, how they play it out, is going to give us a lot of potential indications into later this year, because this is obviously a culminating type of move, a move that satisfies something previous. We originally were talking about, in many ways, a move this big on the downside way back in November of 2012, We were forecasting advance up into January, and then a really big decline, and into April. And in April, they tried to go down, but they closed very bullishly or very non-negatively. Maybe that's a better way to put it. And that was very clear at that point that the market was, not going to be able to do it. You never know 100%, but it was a very good indication. And then from that point, it was, we basically said, well, from that point, from that low that they made in April, now we should see 106, and we've gotten it. Bert has a customer of ours who trades options. I can't name him. It's quiet, it's personal, and all that. But this is a fellow that has done very well utilizing options to take advantage of these bigger swings. It's a slower boat. You're not getting a paycheck that day or even that week, but in the end, you can do a lot of things with options that, you can do them with futures as well. But options as an instrument allow you certain freedoms, certain flexibilities, and they have their downsides as well. But those freedoms and flexibilities can be very useful to know about. Maybe those work for you. They do work for us, and they allow us to do things that we might not ordinarily do with the futures market. Going beyond that, couple other quick markets I wanted to cover here.
I do want to say, guys, David has touched on the bonds, and I started putting together a chart. I'm not going to have a lot of time for the after show today. In fact, there's something I've got to do, but I think what I'm going to do is I'm going to come back for you guys. I'm going to leave the radio room open. I'll put on some pre-programmed content. I'll be gone for about 45 minutes to an hour, and then I'll come back, and we're going to put together some long-term stuff. I'm going to give you some ideas on trading the bonds. I know a lot of you have interest in trading them, and it's new territory for you, and it's somewhat new for me as well. So we'll walk through this together. We'll also go back through the Australian dollar. Now look, yesterday, are you going to go to the Australian dollar, David? Is that part of your repertoire today?
Yeah, we can talk about it. Certainly, we can talk about it right now. Go, bring it up.
Okay.
Let's do it.
Well, I didn't want to front run you here. Tell me what chart you would like to go to next.
The Australian dollar.
I know. Okay. Well, I know that you have them set up in a certain order, and it just makes it easier for you to.
No, I don't have right now. If you want me to say a few things about the Australian dollar, I will. And one of the things that we've been doing is we've been forecasting a June monthly bottom in the Australian dollar, and we wanted to see $90.15 or so hit. They have done that. We've actually made a low of $89.87. We're trading at 91.27, so we've recuperated.
Did you mean June or July?
Well, I'm really in. Hold on here. Let me bring up what market we're in.
Is it because maybe it's 1 month late? I don't know.
It is 1 month late.
Okay. So
yeah, we're in September. We're not in June or July. We're in
1 month
September.
late or 1 day late or 1 week late, that's a good thing when that happens.
That's a good thing. That's a good thing.
If you aren't already in the position, if you're already in the position, then it's kind of a pain.
Yeah, it could be a pain.
If you've been waiting to get into the position, once you get into what David refers to as, in this case, 1 month late, there's no more room for error on the down. I mean, it's either got to do it or it's not.
It's a make or break situation.
Yeah, right.
So our outlook would be then that we're still only halfway through the month, but we can take other shorter-term signals that would imply the month is going to close well and so on if we wanted to be aggressive. But this would imply a multi-month advance, and so this is a sizable thing that's happening in this dollar. We're not doing anything with it just yet, so go ahead and cover what you'd like to cover with that dollar. Dwayne?
Well, what we did yesterday, guys, is we looked at the bigger picture, and then I shrank it down to just this last leg down. And what we've had on the Australian dollar, which has been called by Soros and many of the other big ones, the short trade of the century, but it's been one down leg followed by a short retracement, followed by another down leg, short retracement, continuation of the move, down leg, retracement, until we finally get to this last little leg down. The swing high of that day was June 27th. The swing low was July 3rd. Now, so we put some fibs on our chart from the swing high to the swing low. And right here, the red line, that's the 62% retracement. And so yesterday, we were talking about a long trade setup, where it might be, how could we find the highest possible probability setup? And one of the questions was, after this huge sell-off, why in the world are you even looking at the long side? Part of the reason was because I knew that you had said, from a bigger picture with your work, that you were looking for some kind of a bottom. I think that's what got me even thinking about the long side. And I went on to say that we can flip it over and look at the short side as well. But let's take a look at this long side. We put the fibs on and we said, okay, this 62% retracement, that's the initial obstacle to the trade. And look what happened today, guys. It ran up, hit that area, came off. The next obstacle is here at 92.05. The next minor obstacle, and I said you could waive this one if you want, is at 92.32. And I know this seems very small, but from 92.40 to 92.70, there's no friction, there's no obstacle, there's nothing in the way. Now, after this historic calamity collapse in the Australian dollar, the thought of taking a 30-pip long trade is almost laughable. That's okay. You can laugh. I don't care. It's okay with me. But if price can overcome this obstacle and this obstacle, and every one of these are conservative, I built cushions on both sides, I'm willing to trade 40 to 70, and knowing that I've got a cushion above it, I've got a cushion below it, and we even talked about how you could come in here at 92.10, and if you're the type of person who scales into a position, you could start building your position here, and then if it turns out 32 doesn't throw a wrench in the works, by the time you hit 40, you're at your full position, whatever that is, and at 70, you're starting to scale out, and by the time you hit 80, you're flat. Okay, that was just one little trade scenario that I presented because someone asked, how might I trade this Australian dollar? That's just one idea. So,
nothing wrong with 30 pips at all. That's actually a very tradable. The idea of picking up 30 pips is it can be beautiful. Nothing wrong with it at all. So,
but you still got to use a stop.
Oh, yeah, absolutely.
Hard stop.
That's right.
Hard. As hard as the desk you're sitting at. Real, tangible.
That's right. Not mental.
Yeah. If my desk were just a good idea, all my stuff would fall on the floor.
Oh. Well, get a maid.
So
let's clean that up. You need help around that house. Okay, a couple last quick things. Let's take a few last looks at the market. Of course, the dollar is the opposite to the euro, so you know, we have big stuff happening in these markets. That we've talked about already. I've mentioned the weekly top due for July 8th. This is reflected wave weekly top for July 8th. This week has already shown a pretty good reversal here in this market, and we're going to be putting trades together ourselves for this. So I'm just putting out some general information about the dollar, which is opposite of the euro in most cases. You know, it's not going to be always perfectly opposite.
Yesterday, I'm sorry. Yesterday at the end of the show, guys, we were talking about what a rounding top looks like, as opposed to a V bottom, and this is just a beautiful example here on a daily chart of the dollar. Here's your V bottom, okay, and here's your rounding top. See that? Okay. I'm sorry.
Okay.
Go ahead.
No, it's fine. The copper markets, we talked about the copper the other day. We had put out for our traders a signal that if yesterday closed above the 305 level in this market, this is copper. It does have a mini. It's not super liquid in the mini, but it's the copper market is expensive to trade if you're not trading in the mini. But putting that aside, the copper market, if it closed above the 305, and it did, then we could use 305 as buying territory because the market would likely retest it and so on. So in today's session, copper moved down. It made a low of 303.10. That got us in at 305. We had a stop below at 302 and some change. The stop was not hit, and the market has gone to our first target up at, the target was 310. The initial, it got up to 309.95. That's very close. And there's a real possibility, the bigger picture, that the copper is really going to have a much larger move. So I won't go into all the details, but we wanted to get a start in it for the idea that we may see a much bigger advance. I won't go into all the reasons behind that, but the market has that possibility. And one of the nice things is if you can get a lead in a position with the idea that that possibility exists, you know what? The match might just like the next match, and before you know it, they're off and running, and never to see those prices again that you entered at, and you have that bigger move maybe underway. That's what we're kind of looking at with copper here. So we'll continue to watch copper over the remainder of the week and into next week and so on. Finally, in soybeans, the market has now advanced. We talked yesterday again about July 10th being an important daily top in this market. We wanted to see them get up to 12.92. They have, I think today's high was 12.95. So if we close below 12.92, that's an early sign for this top, and then we could do something with that on the downside as well.
What market are you in now?
That was in soybeans. I think that's everything right now that we have. We have a few other things, but I'm going to leave it for the time being. We're running a little bit late on the time today, but S&P, just one last thing, they're still firming here, still testing this 50-51 level, and this will make, I guarantee you, this volatility injected in the market will make the remainder of the week very interesting with some very tradable indications. I was starting to lose a little steam, in my S&P feeling for the week until now, because I was thinking, well, we're starting to see the summertime behavior and so on. But now with this injected in there, I can pretty much guarantee you the next 2 days will be interesting. So quit your job, come home, and trade the markets with us. Just joking. Keep your job. Come home after work and trade the markets with us. Whatever you can do, the next couple of days should be pretty good. And there you are.
All right, David.
Thank you for having me on. Thank you guys for the questions and whatnot, and I'll see you guys tomorrow.
All right. Thanks so much. We'll see you tomorrow.
Okay, see you then. Bye-bye.
All right. Bye-bye now.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you. Every day's a new day in love with you.
Okay, guys, that's going to do it for me. I got to take off here for about an hour, but this is my plan. Okay, I plan to come back and talk with you for a little bit in an hour. If I get tied up or hung up, I apologize. So don't change your plans because of it. I'll leave the room running as I always do. I'll leave the charts running as I always do. I'm going to go to this thing for an hour and it's meeting, and then I'll try to be back here just to, and if I don't get to it today, we'll do it tomorrow. I'll keep these charts up, the one I showed you of the bonds. I'm going to show you some windows of opportunity that I see. Okay, and we're going to, whether you trade it or not, watch it, record it, write it down, and let's see how it plays out. Okay, and we'll learn bonds together. How about that? Now, what I am going to do is I'm going to put a tweet out here on the S&P 500, but it's going to have a huge caveat. It's going to say, number one, be flat ahead of Bernanke speaking. However, if Bernanke weren't speaking, this would be the tweet we would put out. Okay? This way we're just kind of putting it on record. We're committing ourselves to this is what we see, this is what we think, and even though we like the idea, we feel that it is more prudent to be flat because we don't know what he's going to say. We don't know what kind of questions are going to be asked, and we don't know what kind of answers he's going to give. Okay? So as compelling as the opportunity in front of us might be, I'm going to pass. Okay? I'm going to pass. And maybe it's a dangerous thing that I even put it out there, but I want it on the record. And so there you go. So when you see this tweet come out, just make note of it, but don't trade it. Okay? There's going to be a complete disclaimer in there that says, don't trade this. All right, I'll be back, God willing. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
Hey, how are we? Good? Well, you look good. And I don't say that to all the services. Luke chapter 2, we have tons